Hey guys, Troy here from MarketMastery. Just moving on to the fourth episode of the Ichimoku tutorial series. Okay, today we're going to be focusing on the Ichimoku as a whole. Right, all the aspects coming together. We're going to be focused on support and resistance, horizontals. Right, also trend lines that allow us to map patterns within the candles. Okay, like bull flags or wedges or just consolidation of price or wedging of price. Right, the trend lines help create some form of pattern that then traders then identify and trade. Okay, so just real quickly covering over what we've already learned. When we're above red clouds, we want to be cautious. Right, look what's played out here on the weekly, on the first actual candle here of this red cloud. Because this is a weakness. This is the first real aspect of the red cloud. Okay, and that's played downside. So it's nice to see that reinforce what I've been saying. Go out to the daily time frame. If you guys remember in the last two episodes, I mentioned when this came into price, I need to be cautious, right? And that's when this candle here played out, right? And then since then, we've had the bearish cross here. Price has struggled to break out, and then has since come back down very, very violently. You don't normally see this on the daily time frame. The Kumo is usually respected as support at least once before you fall through, right? There was just no bounces allowed in this push down here that we've experienced, right? So this is why we stay out of the market, right? Once that cross happens and once this is in price, we stay out. Chances are it's going to go against your trade idea, right? We're on the 4 hour here. What can we see on the 4 hour? We fell, lost to the red cloud, right? The blue line has since come under the red, so the blue was below here, right? And we could not get it back above, right? So this candle here, this pin bar first, would have been the long entry, and then completely rejected here. So the entry for this position, if you were to take it, right, would have been an enter in this candle down here, short position, here. You would have actually got in here. So your stop loss would be up here, above the baseline, right? And this is open target still. So this trade's still live because this hasn't finished yet. But what we do need to take into account and consider is that we're also above, sorry, this is above current price, the green cloud. So if you were taking that into account, just be cautious. So the higher risk traders would have got this, but they could have burnt them some other times as well. Okay. So what we're going to do is we're going to move away from this kind of price action, and we're going to be able to go back to somewhere in here, right, and then use the replay tool. So I'm going to go out to say the 1 month, and I'll just come and mark, remove drawings, and come down to here, vertical line. It's going to mark probably about here, and then jump in on say the 4 hour, right. What was that? Oh, I didn't use the replay tool. Typical. Alright, let's use the replay tool. Come back to here. Alright. So this is midway through March. Alright. We'll quickly smash through the time frames weekly. Weekly time frame is trying to get above, alright, the conversion line here. It looks like it's about to on the weekly. The daily, what are the daily telling us? The daily is telling us we've just got above the red cloud. So to be cautious and to expect craziness, but the market is starting to turn. So the weekly and the daily are now in sync somewhat, and saying that trend is probably reversing. So as a technical analysis point of view, taking all these aspects into consideration, this is way away from price. So there's no long entry available on the weekly. But what the weekly is telling us is that it is reclaiming the conversion line, okay? And this is somewhat up. So just to pay attention here, alright? So we're going to go down to the daily, and the daily is telling us, okay, well, there's no long opportunity because we need to be over here for a long. But we are above the red cloud. We were above the conversion line. The baseline somewhat support, and this is trending up. Alright, so we've got a thesis here on the larger time frames that a macro trend reversal could be in play. So this is how Ichimoku can help you navigate larger trends. You don't have to trade them. They can just help you navigate, okay? So something to keep into mind. So if we do end up in another bottom again, let's say for instance current price action falls from the current price of about 11,000 down to say 4,000 again, and we go sideways for a few weeks or months, this is how you can analyze that, and Ichimoku can really help you pick those bottoms, right? So the 12 hour, right, is now coming above a green cloud, but there is a bearish twist coming through and it's coming into price. So there's no entry available, but even the 12 hour is now above. So if this is going to hold and rally out of this, however this plays out, then the 12 hour clearly front run the daily and the weekly by a mile, right? So let's just play out some. Hasn't respected the Kumo here, right? Held the conversion line for a while, but has fallen off, so it's not looking very good. I'm going to just jump down to the smaller time frame again, maybe the 8 hour. The good thing about Ichimoku is you can use any time frame to trade on, the 5 hour, the 6 hour, whatever time frame you want. Whereas if you're a price action trader, you may prefer the more popular time frames like the 4 hour or the 1 hour or the 30-minute. Whereas an Ichimoku trader, this strategy is made for all time frames really. I'd recommend it on probably 4 hour and above if you're learning it. You get a lot of false or very small trades on the hourly or lower. So I definitely recommend the 4 hourly and above, especially while you learn it. But you could use the 5 hour if you wanted to. You could use the 6 hour if you wanted to. These aren't time frames most people trade, but they do help with confluence. So we're going to the 4 hour, and we're going to try and play this, trade this moving forward. Okay. So if we look over here, what we can see is there's a level, right? Support and resistance level. We zoom out some more. We'll just map a previous one over here as well. To me, that looks like a bit of a level. Okay. I've been somewhat confirmed by the touches through here, and then over here as well. So there's no real position right now. Even though this is a short position, I want to see rejection of this conversion line before I go short, because I've only come to the trade now, right? It would have been nice to be back here somewhere, but that's not the case. So allow us to play out. Okay, we didn't get the rejection, we actually broke up. So on this time frame, there was no trade available. Maybe on the 30-minute or the 15-minute, there might have been an entry here, but we don't have an entry. We need to wait until about the 11th of March. So we need to just allow this to play out. Cool. So we can see this, right, starting to play out. We can see the market is still just trending, right? There's no real major trend here, highs and lows. It's more of just climbing. It's not a very healthy market. So we're nearly above the green cloud. We're looking for a long soon, ideally. Okay, so prices come down to the conversion line here. It has failed to hold it so far. This is flat, and this is in the Kumo. Okay, so no real price action is happening here. This is reclaiming both the conversion line and the baseline, but this is below price, and this is still flat. So no entry available. Right, still bearish, but it's no bearish trade because we're not under the red cloud. So all we have to do is be patient. Check the chart every few 4-hour candles, and then look to take an entry. So what we're seeing here is a level being reclaimed. What I want to do is just mark it. So coming back to this is a pattern over here, right? You can clearly see some form of a triangle through here with the wicks, right? Or if you use the candle bodies, maybe an ascending triangle through here, okay? So however you want to look at it, we're coming back to this level. What's more important of the pattern itself is that we're now back here at its form of resistance. So if we can flip that into support, maybe we'll look for a long, but caution, there's a red cloud. Red clouds are annoying because they mean we have to be patient if we're looking for longs. Right, so let's just see how this plays out. I'm going to slow this down a wee bit. We'll just see how this plays out. Okay, so we're broken above resistance, okay? Not looking too shabby. There's a trend. Right, we've got the high, and then a higher high so far, and the low, and then a higher low. I'm going to also use a trend line here. I'm going to go to these tops, okay? So, even though this is breaking up above resistance, which is now looking to become support, I just want to take into account that there's also another form of resistance, a diagonal trend line, right? And we'll also come to this red twist. So it's going to be patient. Alright. So we can see it's respecting this level, this diagonal trend line so far. If we can get back above that into support, then maybe we're on and we're looking for a really solid breakout. But until then, just be cautious. Okay, so there's our dump. Now we're on to the next level of support. If this can hold here, then maybe we'll look to go long, right? We'll see how this plays out. Okay, so can't get back above the conversion line yet. We're coming up to this red twist. This is way behind price, right? This is trending up, so that's looking strong. Alright. So this looks like some kind of flag in here. Right? On a smaller time frame, there would be a nice flag in this. But we're also just be cautious. Right? Alright. So because we're being cautious, we have to wait. And we've seen where the twist is, the weakest point, is exactly where price is dumped. Alright, so zooming out, we're still just consolidating above support, right, and rejecting that diagonal resistance for now. The diagonal resistance is only relevant for a while, right? I don't think it's going to be a massive thing, but we'll just keep it in the back of our minds. Also, just want to be paying attention that this could now be a bit of a rising wedge. Rising wedges are usually a bearish pattern, and they usually do fake out like this before they roll over, and then either one of the two, right? So we'll just see how this one plays out. Bit of a rising wedge here. So mark that back in. Going for confluence, right? Wicks. Gonna ignore the outlier. See how this plays. So let's try one more time at a resistance that we've marked in. Right? So by accounting for patterns as well, right, we may save ourselves here, or because we're trying to be too cautious, we may actually end up missing on a fantastic entry, because this is consolidation above support on the horizontal, right? But it's also rejecting each time it tries, right, to get above. And this is also a really bearish looking candle. So that candle there closes like that on this time frame, the 4 hour. Okay, I'm going to be looking for reversals maybe on the 5 minute or 15 minute. So let's just see how this plays out. Alright, alright. So we've got a bit of a level through here as well, right? We can see the candle bodies are having a hard time closing above this. So we keep that in mind, as well. Let's draw this up a little bit further. Just want to account for everything. Okay. So we've gone sideways, up, sideways, and still somewhat completing the pattern here. That's usually a bearish pattern, and these rejections of this area, they are a concern. So let's play out some. Oh, this is a harder one. This is a harder one. This very well could have stopped out a lot of Ichimoku traders, okay? Because it did hit up, right? But this was flat. This wasn't really trending up as this happened. But it reclaimed the conversion line. Okay, the conversion line's pointing up. That's pointing up. Let's go back 26 periods from here. So that was actually touching price. So the caution's somewhat there. This is a real hard scenario to answer, really. I probably would have taken that long, right? And I would have been stopped out down here. So it would have been a small loss. Because that was looking for a potential breakout, right? Because it rejected the resisting, so the rising wedge for here. Finally got above. Looked to be flipping it into support because that did look like it was a bit of flag. SF period and nuked. So that would have been a small loss. Alright. We'll just carry on. It's getting really tight in this, right? You can see it's getting really tight in here. Bit of a bullish candle coming at the moment. Let's see how we play here. Alright, bit of a bullish pin buy here. Alright, and another bullish pin buy here. We're in the green cloud, so no trade on this time frame. But you could look for a smaller time frame, like maybe the 5 or 15 minute, for bullish entries after a candle like this. Well, that would have got you in a bit of trouble. So we've come down here on the 4 hour, we've fallen under the cloud. And it's still saying no trade available in this time frame, right? So because we've been impatient, we can jump down to small time frames. So what we're seeing here is, well, now price is coming back up to our trend line. Alright, and it's somewhat rejected off it so far. We can probably clean that up a wee bit. We are reclaiming this level. Alright, so the pattern has come up for a rounded retest. Now what? It's holding this level. Okay, usually you see a pullback. Because we've got a red period here, we can't go long yet. Okay, not on this time frame anyway. Alright, so it's starting to push up well above a red cloud. No entry. Alright, So need some more time. Alright, so we're still dancing with the conversion line, right? This line here is somewhat relevant. It's not as relevant anymore because there's been a lot of wash in and out of it, okay? And maybe this one here as well. So price is coming to the apex, like the exact apex moment of this, and now it's trying to flip it. So this is somewhat, we could call this a rejection of the bearish targets of this pattern, right? So we can nearly invalidate that pattern altogether and just look for new price action, which very well could just be a bit of a support resistance flip of this here, right? Wick, the highs, and maybe it's flipped it into support right here. So we want to wait until, ideally, on the 4 hour, here, or about here. Alright, one of these, in this range here to get long. We want to wait until we're above the red. We don't want to front run it because we'll see how many times they can wreck you. We're getting really close. So identify a pattern. What we can see here is somewhat ascending. Okay. Close that and close that. So we're getting an ascending triangle playing out. Ichimoku's conversion line's pointing down. This is pointing down. It's not the best looking thing. So we've got the pattern. We need to be patient. Let's wait a few more candles. Okay, so what's this candle? This is closed. So we're looking for long entries now. Okay, we're looking for long entries now. This is a massive 4 hour pin bar. Alright, it swung the lows. Right, rejected this ascending triangle pattern. Right, and now we're allowed to go long. Right, so pretty much this candle here, we're allowed to go long. So we're going to go long here. We can either go on the retest or on the open of this candle. Now this is a trader's discretion. You choose. Right, for me, after a candle like that, I want to be in the market. Right, I don't want to wait around and hope for a retest. So I'm going to get in on the open of this next candle. Right. Cool. Stop loss below the wicks and below the waistline. A little bit of breathing room. Right. So the ascending triangle looks like to be playing true. This has a measured move as well. Okay. So we can take this into account from down here to here, from the point of break, from here to here. So if and when it reaches that, then maybe we can look to be a little more cautious with our stop losses, right, based on this baseline here. Okay, so far, bullish retest is in. Okay, it's held the conversion line. This is trending up, this is trending up, and it might head towards our targets. So I'm just going to move this to the right a little bit. Cool. And so far it's looking pretty good. Okay, so let's reach our target, and we want to be then moving our stop loss up. So our stop loss is currently down here. We could then move it up to say somewhere like below the baseline. But because this has just gone crazy high, right, we can't exactly just move it up because the baseline itself can't even see it. Right, it's hiding behind the candle because of the velocity of that candle. Cool, so we can now move our stop loss up to here. Right, this is conversion, that's the baseline there. So this, by being patient and waiting for all this nasty mess in a sideways market, we finally got a nice win. Right, our stop loss was in a sensible position from down here. Right, so we would have had a nice allocation of our account in that trade because of the stop loss distance from the entry. Right, and that would have been a nice win so far. But you can see how taking the ascending triangle, resistance and supports, allowed you to really fine tune this to get the right entry before for going, right? And understanding candles as well. So a candle like this is usually an entry candle, okay? Especially if it rejects a dump like that at the end of a pattern. It's telling you that the bears that tried to strike were not strong enough, and the bulls have won that argument, okay? So we can allow us to play out some more. Let me just speed that up a wee bit. Alright, cool. I'll just clean the chart up. Actually, we haven't taken profit just yet, so this would have been higher so far. We'll just see how this plays out. At no point have we had it close below the baseline. Okay. We might be about to get that close below the baseline up here somewhere, maybe. But what we can do at this point in time is set our stop loss back here. All right, under the wick, under the baseline. All right, we're already, this trade's already, current price, 26% up, so it's a massive win, massive win. All right, so not until here do we get out, so it would have been even greater win. To there, would have become a 26% trade. Awesome, all right, because once it closed under this here, that was your exit signal, not waiting to get stopped. Cool. So that's that done now. What we're going to do is then identify a new market structure and look for a new entry. So while we're above the green cloud, we want to be a long entry. So while we're in it or around it like this, no entry. So what we can do is identify levels, right? Clearly a level through here. Okay. There's a bit of an incline level through here as well, right? And this playing with our Kumo as well, which is fantastic. So no entry just yet. Let's see how this plays out. Okay, so it's come under. It's inside the Kumo now, not looking so great. We want to see all of our four aspects come together and allow a trade. Okay, so this trend line is still relevant in the form of resistance, and this is still relevant in the form of resistance as well. But the pattern itself now is invalid. Okay, so the pattern we're not mapping that pattern anymore. We're just mapping that these two are relevant. All right, weakest point has come through. Getting a bit of a bullish twist through here as well, but it's still a red cloud. Okay, see this resistance line we put in and paid attention to? We're now resisting against it, alright? So we've got a green cloud coming up. Plan of attack. If we can get above here, before this, sorry, before, but retesting somewhere around here, that'd be ideal. Right, this needs to be above price, and this needs to be trending up all the way over here somewhere. Okay, so it's come down and held. Weakest points here. We can reclaim this. I think it's game on. Let's see how we go here. The 4-hour time frame. Just delete these. If you wanted a front run, right, you need to wait until you're above here. Just wait a little bit. Okay. So we can see in here, weakest point, getting volatility. We reclaimed this. Okay, we reclaimed our level. And we've shot up. Okay. We can also drag this up further. And see that's where we've rejected it again. Right, so we're not tracking the pattern. We can just see this level. Right, and I'll just maybe just also use this. Bit of a trend incline through here as well. It's a bit of a channel at the moment. We're nearly above the green. We're pretty much above the green. Ideally, we want to see a bit of a pullback, and then look to take an entry. Okay, so we've got our pullback. Now we need to see how these candles here play out. Okay. Ideally, we want to see this pointing up. Price get above the conversion line, right, and then we should be good to go. We've also got support here. All right. This could be your entry candle, a bit of a pin bar. We're not above there yet. So one or two more candles. Okay, we're good for me waited. All right, well, we need to wait for a new structure. Okay, I'm going to remove this line. It's no longer relevant in my opinion. This one here can go away now as well. So can that. What we want to do is keep this level here on. Alright. And also, because now we're under the red cloud, we need to be cautious below us. Alright, so we want to be paying attention to the downside. I'm going to go ahead and mark this high and go right. Alright, so the impulse high, go right. And then maybe the same with this level here as well. Right, so now we're at support as well. Just put down to the red cloud and just see what plays out. Okay, so first rejection, but not under. This is trending up. This is now above price. This is now pushing up here as well. Alright, we've reclaimed our level. Right, this is our level we were paying attention to. We've reclaimed it. We're above the red cloud, so no entry on the 4-hour. But it's looking pretty good here, right? But we need to be patient and wait until here. No earlier. Alright. So a bit of a tough one. Do we enter straight away on this one? Because it closed by default underneath the conversion line. right? Or do we wait and then get in on the retest down here? Or do we market buy here and stop loss down here? So there's a few different approaches here, right? Let's see what we can identify to help us. There's a clear incline through here, okay, and a clear incline coming up through here. So resistance, support. I'm going to wait for a few more candles to play out. We didn't get this candle because it would have closed under. We need to just be a little bit patient here. If this candle ends up closing in some form of a pin bar or some kind of bullish candle, maybe we'll get in because that retested support. This is getting extremely close as well to crossing bearish. Alright. Interesting price action, nonetheless. Alright. We're now above support. Oh, sorry, the resistance has now become support. We're now above the conversion line here. Above the green cloud, but it's flat. That's flat. This is above price, so ultimately we want to see this curl up and this curl up before we take an entry. Alright, so it curled up a bit here. And then it'll be over here. So we can maybe look to get along in here. It's a bit of a tough one. Where do you have your stop loss to be safe? Baseline's here. Coming down to this wick. Okay. And open target. Okay, so here we go again. Got a nice entry there. And we can see that this was just starting to get a bit parabolic, right? So how you want to see this? It's getting pretty parabolic. Nice SR flip through here, that level we've been watching, right? Turns it into support here and goes. So that's definitely the candle to get in, if not this one, right? Both of those entry candles there, and the market has reacted, and away you go. So no taking profit until the conversion line and baseline cross, right? Or closing below the red line, which is the baseline. Okay, so a bit of a pullback into the range between the two. Not a bad thing, right? We haven't lost anything. But what we can do now is make this a free trade and bring our stop loss down here under the low, right? Under the little order block here, under the baseline here. Cool, so we're still nicely in profit. What we could do is then move this up here. So we're going to new low, new wicks, right? Under the baseline there, okay? Okay, we can see some kind of fake out there, a bit of an SFP to the upside. Doesn't look okay. We're going to move our stop loss up to the baseline, right? We don't want to be moving it too close though, because we look left, a bit of support here. So maybe just a little bit of leeway here. Anyway, we'll stop that anyway, doesn't matter. Alright, so nice little win here, another 27%. So far, two massive wins out of this move. Right, remove drawings. Okay, massive throwback. We now know there's a level through here. We also know there's a level up here. Right, probably just below us, where current price is through here. Let's play true. Okay, so nice, massively nice impulse candle here. Right, after a candle like that, I don't think it's smart to get straight in. Okay, you want to allow the dust to settle so you can see clearly, and just watch what happens. Okay, so nearly ready. This is pay attention to this guy. He's still in price. Nearly out. He's nearly out. This is coming back for a retest. Got a twist coming as well. Okay, we're holding the conversion line over the red twist. I like that. I like that. With this twist, I am expecting some kind of throwback or pullback. This is above price. This is trending up. Nearly ready for a position. Okay. What we could do to try and implement or complement that is bring up an indicator called stochastic, RSI. Right. And when this is ready for a swing high, when this comes down and we're ready for a swing high, we need to take our position. So even though this could be going sideways, right, this can help us try and time that. Alright, so as long as all the aspects are coming together and telling us it's okay, we're going to look to take an entry. Okay, so we just lost the conversion line. So we're going to reclaim it here. We got that red twist. We were expecting some kind of drama through here. A few more candles. We're going to mark on the chart where we can go long. Here. So if everything's looking good when we get to that point, looking for a long. Okay, it doesn't look so good, and we got a twist here. We now need to reverse all of that before we can go long. Okay. We'll drag these out to the right. These are still relevant to what we're trading. Okay. You can also see if you want to get quite picky or your smaller time frames, the low of here, right? Let's create another level for here. You can even say it was the low of these candles now. Probably this candle here, this black one, right? Gives you a nice level through here. If we flip that into support and then everything else can line up, then we'll look for an entry. Okay. Above green cloud, green spark pointing up. This is coming to price. Need to get this above price. This is already in a full swing high. Okay. We want to just be patient here. Okay. So you can see there's a bit of a resistance through here. No trade available right now. But it looks like it's about to reclaim the conversion line. Then we're interested because this will be coming out of price as well. Okay. No, it hasn't reclaimed it. And then just completely shot up. That's pretty crazy. Alright, so what we're doing is looking for a long position. Ideally off support. So I'm going to throw back. And our stop loss will be below here, or below the baseline. We could be coming back even further here, alright? And this has the appearance of an ascending triangle through here, right? So as we push out, we're getting a swing high in this as well. If you're not long, then we want to be looking for longs. Alright, so let's pull back a wee bit. It's not looking so good. Bit of a retest. You want the retest to usually be a nice throwback. This is not that. Alright, so let's play out some more. There's a bit of a throwback after a period of time. Looks like it was the apex as well. Okay. So I was trying to reclaim it through here. We can get in a position soon. We look for a long. Right. Okay, so we've got the twist here. So even after this dirty price action, this is reclaimed. Okay. With a bullish twist. This is green. This is coming above price. So still enough to pay attention, and that there might be an entry shortly. No, not yet. Not yet. Alright. So we're under the red cloud here, but we also had a bullish cross, so can't go short. We finally get the red, the bearish cross, but then this is in price. So during all this period, even though it looks like we could have been reversing here, I told you to stay out of all trades. So just say go long or short, okay? So we'll just move this out of the way. Our position is still open from back here. No, we didn't actually take a position, did we? Alright. Okay, so bullish cross through here, in price. Nearly above a green cloud. Right, we can see this is also winding right up. This is the stochastic RSI. It can really help complement, oscillators in general can really help complement a strategy like this when it comes to an entry. Because if it's midway in a swing low, then maybe you want to be a little bit more patient, right? Alright. It's starting to break down. It's not a bad thing. This can just range sideways for a while. Right, we've come back up to the previous high here. Looking pretty good. Through here, bit of a level. Nearly above the green cloud, so ideally we have a pullback into it, right? And then recover, or breach, retest while also above. Okay, so we got the breach, and it looks like a bit of a retest here. Maybe it looks to get long at the end of this candle. So we're above the green cloud, it's above price, this is trending up, right? And there's a swing high about to come as well, so if we can get long somewhere in here, that'd be perfect. Alright, I'll zoom in and just check this out. Alright, so a bit of a level through there. Okay. That's pretty much all we got right now. I do want to get long here. I do want to get long. I do like this. It's ticked all the boxes. This could be curving up a wee bit. Alright, so under the baseline. I might even go to the wicks here, right? And then upside target. We haven't closed below the baseline yet. We are in a minor loss right now, but we haven't closed. All right, so let's close out. Okay, so it's just saving the conversion line and baseline here. Okay, we're back at our entry. We can now move our stop loss up as well. Right, we're already below this wick here. Try and reduce that risk. All right, so we've now broken up to the upside. We can now move our stop loss up even higher. All right, completely broken away of our range. You can see it rejected once, got above it, retested, and then took off. And it's completely taken off now. So what we can do is our target moves right up. Our stop loss, we want to move this to in profit now. So we can even bring that up to all the way to here, right? Because that's the flat period in the Kumo. Sorry, the baseline. And it's still going further, right? So we still haven't taken profit yet, because that's what the strategy tells us. So more room to the upside. Again, there's another flag here. Okay, so how you want to look at this? Wick to wick or not? For here, another flag. Okay, so this has a measured move. We can also use that measured move from here to here. Right, drag that up. And then what we can also take into account is this is in the middle of the swing high. Okay, let's just watch how all these elements play out, because we're still in this trading position, right? Our stop loss is down here. We're still good, and we're just completely taken off now. Okay, crazy, crazy. So maximum strength right now, and we've reached our measured move. Everything's looking really good. We're gonna move our stop loss up further. This is our stop loss here, under the flat period here. Okay, could even, because it's starting to get quite high, could even come under, like, say, a pin bar here or the frost candle there. You really want to secure profit, because this has been an amazing trade so far. So you don't want to undercut yourself or allow yourself to give too much of that back, because that's a nice win. And it's come straight back to our okay. So and we're out. But you can see how adding this support and resistance, right, and understanding these patterns or these consolidation points where the price wedges between either a horizontal level or a diagonal level, it gets to a point of volatility, and that volatility plays out. Each of these patterns, they have measured moves. So if you know how to track those measured moves, you can understand if the price has reached its potential based on some traditional price action methods, right? And then if you've got like an indicator like a stock RSI or MACD or just RSI or even just stochastic, they can really help you complement these kind of strategies, because when it's on a swing low and it's coming down to support or something like that, that's when you're looking to get long, right? So it's a little bit more playing out. Cool. So it looks like making lower highs through here. We're falling through the cloud. There's no trade. If anything, you're looking to go short under the red cloud. So at this stage, this runs over, right? And it got us out of this trade. It got us out right here. Once we close below, so this candle here, that was our get out candle. Okay. So you could have had your stop loss higher, which is where this was here, under the frost candle, and they would have saved some, or have it down here. Either way, massive win. And you can just see how taking the basic support and resistance plus some patterns can help you really fine tune the trades. So you'll be taking less trades and more likely, but your winners will run hard, okay? And then when you get stopped, it should be at a very minimal amount, because you're able to understand where the stop loss should be based on the pattern. For instance, if we were trading just this pattern here, where it would be an ascending triangle, you'd be looking to enter on this candle here, or that one in particular. When you do that, what you can do is you have your stop loss either down here, or even down here. So when you combine these two strategies, you need to choose, am I trading the fractal, or the pattern, or am I trading the baseline as my stop loss? And then take that from there. But if you're trading the pattern and using Ichimoku as your exit or something, you could then have a really tight stop loss from your entry, right? Because we actually just measure that distance here, right? Very, very small. So something to keep in mind. Other than that, I think I'll wrap it up here on how to use Ichimoku in combination with drawing tools, right? And even another indicator here. The next episode, we're going to be focusing on a custom indicator that I'll give you guys access to, okay? And it'll have alerts on when these crosses happen. and really help you improve your game. I'll also give you guys the slides on these slides as well, and then we'll wrap it up. Cool. All right. I'll see you guys in the next episode. Thank you.